Looking at the world currency ranker, WCRS Go, for our clients for the extra perspective on how some of the G10 currencies have fared over the last 12 months. This is a story of most of them losing quite a bit of value, with the exception of the Japanese yen up 1.8%. Is this the time then to pick up more yen positions?
I'd be going against that. We've talked very many times in the past about the safe haven status of yen, and of course a lot of that stems from the fact that when times are looking tough, investors tend to bring their funds home, and of course Japanese investors are amongst the most important and agile in the world. So that yen strength, I think, has been very important. It has reflected the sentiment, but if those early signs that we're seeing of a tilt back to growth are the case, I suspect we'll see the yen under pressure. Gold had every reason to really burst out of that range and through the 1330 level. It didn't do so. And I think we're looking at a similar situation with yen. It's received all the support it can get. And although interestingly, the economic data in Japan continues to improve, it'll be a while before growth is a key driver there of the yen. So I suspect we're looking at yen weakness. And instead, I'd be favouring growth currencies like the Aussie dollar against the safe haven yen as a near-term trade, as I see markets moving away from the extreme dovishness.
So, Michael, what I want to know is who killed the haven trade, the dollar. I started the show with the dollar down at an 8-week low, 5 days in a row, the longest losing streak since August of last year. And Goldman Sachs say, take me back to the 1980s. We ended up with a Plaza Accord. We're seeing this turn in the dollar from haven trade and trade angst to really pricing in a Fed move. That's my take on it.
Well, the US dollar has many characteristics, doesn't it? It's also sometimes seen as a growth exposure. And while I don't doubt the safe haven status it did enjoy, particularly in the first quarter of this year, I think that too is over. I think a lot of the flows internationally that were headed towards the US are already there, and that kicks out another potential support for the US dollar. Having said that, I suspect at a 90% chance of a rate cut within 2 months and a 50% chance of 2 rate cuts from the Fed, we are at the extreme of interest rate pricing, and as we back away, that could also be supportive. I'm not looking for the dollar to take off, but a simple move back towards the mean in US economics could see support for it.